Good evening, everybody. We're going to get going in about 4 minutes. All right. Good evening, good afternoon, good morning, wherever you are around this beautiful planet. My name is Benny Allen, and I am your host for tonight's Inner Circle Live Asian session. Typically, I have my awesome partner, Mr. Ryan Carthage, with me, but he will not be able to join us this evening. So I'll be manning the chat and working the technicals on the charts. So if you put things in the chat tonight, just be patient. I'll check it as much as I can. But just remember, you can always take your microphone off mute as well if you have a question. So definitely feel free to stop me, interrupt me if you have a question or if there's something that I need to go over in greater detail. So without further ado, if everybody can drop me a 1 in the chat just to make sure that everybody can hear me clearly. All right. And if somebody can take their microphone, let me see, make sure everybody has access to their microphone off mute, because I had a technical issue last night with my microphone where I couldn't hear you guys. So if somebody can just take their microphone off mute and say hello, so I can make sure that I hear everybody.
Hello.
Awesome. Thank you very much. I really appreciate that. So now that we have that set, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots and lots of notes, and let's make sure that we continue to do an amazing job of participating and engaging. And before we get going, as always, a disclaimer: trading the Forex market is risky. Never risk money that you cannot afford to lose. I am not a CTA, which stands for Commodities Trading Advisor, meaning that everything that we cover tonight is for educational purposes only. We can show you our strategy. We can show you where we're looking to get in a trade, looking to get out of a trade, teach you some things about the fundamentals and the technicals overall. But at the end of the day, you are 100% responsible for your own trading account. All right, so with that being said, we want to take a look at some things fundamentally before we get going on the charts tonight. Hold on one second. Make sure. Can everybody see my screen okay? Drop me a 2 if you can see my screen. All right, awesome. Okay. And let me make sure we've got. Okay. So I don't see where I want to start off is I want to take a look at investing.com, which is a source that we use because Nathaniel, which I don't see him on here tonight yet, but I want to make sure, so at least we'll have it recorded in the group, that I go over their website because he had that question last night and then we accidentally closed out before we addressed this question about investing.com. So I want to make sure that we go over that, and it'll be good to review it for some of our newer people as well. So we'll actually start there. So this is investing.com. All right, it's a great site to follow technicals, fundamentals, Forex analysis, and not only Forex, but all asset classes. Really great articles written by some top people in the industry who I definitely respect. But one of the main things that I like to use on here is the technical summary. So if you go to investing.com, and then you see all these tabs here, news, analysis, charts, and then if you go to technical, there's all types of things that you can take a look at. Everything from moving averages to indicators to candlestick patterns on pairs. There's a Fibonacci calculator, candlestick patterns again, and then there's technical analysis, and then there's the technical summary. So I really like to use the technical summary because it just gives me confirmation based on what I'm doing on the charts technically. I like to kind of compare what I'm doing and see if it falls in line with the overall technical summary in the market. So hold on one second. Good evening to everybody that just joined us. Make sure that you have control over your microphone. Okay, so just to take a look at this, one of the things that you can do, and it'll actually save it for you if you just create a free account. Like I have a free account that I signed up for here, doesn't charge me anything. And so this is your profile, so it'll actually save it for you. So how you can align this. So if you see right here, I have here across in the columns, I have a weekly, daily, hourly, 15-minute, just like how I have my charts aligned in Smart Trader or TradingView or whatever platform that you use, MetaTrader 4, you can align it the same. And then whatever pairs that I want to take a look at, you can customize it and align them, okay? So for example, if we come here and we look at the New Zealand pairs, you can see that you've got strong buys across the board from your weekly, your daily, your hourly, your 15-minute, just strong buys all across the board on the New Zealand pairs, okay? So what I like to do is I like to match this with what I've done already technically to see if there's some alignment there, to see if I'm on the right track. So it gives me really good confirmation and some confluence in regards to the direction and overall bias of the market. Okay, everybody gets that? Drop me a 3 in the chat if you understand what I'm saying so far. Cool. Appreciate it. All right. So, yep. Question? No? Okay. Thought I heard somebody. All right. So the way you can customize this is that you just scroll up here to the top where it says customize, and you click it, and you can see it has 4 columns for you. So 4 different time frames. So in column 1, I have my weekly, right? You can change that around if you want to. My daily, my hourly, and my 15-minute. You might do your monthly, your daily, your 4-hour, and your 1-hour, however you want to set it up. Then it gives you 18 pairs that you can select. So right here, I've got 17 out of 18 selected. okay, that are possible for me to select. And then all you have to do, if you want to put in a pair, let's say like the Aussie dollar, you just put AUD, USD, and it'll pop up like this. You put it in, you can see it right here. Now it's added. You even have the option, like if you want to receive your technical summary by email, you can do that. I've never actually done it because I'm constantly coming to this page. But then you hit apply, okay? You hit apply, it'll update it. And here at the bottom, you'll see Aussie dollar, weekly, selling, daily, it's a sell, okay? More long-term. And then when your 1 hour and your 15 minute is calling a buy. So that tells me that, hey, I'm short, so I'm probably in a down retracement zone, right? A down retracement zone, which means I probably got a down AB boundary somewhere, and then price is retracing, right? So that's why on the lower time frames that it's put me in a buy situation. Okay, so good confluence. All right, nice little tool to use. All right, and you can pick all pairs, so you can look at the pounds, right? So long, but you can see the Aussie right on the lower time frames is in the sell right now, and then you can just go match it. Okay, so just wanted to make sure that we went over that because Nathaniel had a question on that last night. So, and of course, this whole recording is in the inner circle. You go to topics, and then you go to Inner Circle Live, and you can find this if you need to watch it again. Okay. Any questions on this site before we move on? Take a look at some other things. No. All righty. So let's go and let's take a look at what's going on. We know what happened with the US CPI. Canada had numbers come through. Okay, so we look at Wednesday and we look at the CAD CPI came through above forecast, right? So all their CPI numbers came through pretty good or at target or above. All right, so that was pretty good. Whereas yesterday with the United States, didn't come through quite the same. So Canadian dollar, pretty good. What else did we have? We had the GBP, right? The pound CPI that came through early this morning, like 2 a.m. And we can see that it came in above forecast. All right, so good for Great Britain, good for Canada, not so good for the United States, but it is what it is. A lot of people kind of figured that's how it was going to go for the U.S. dollar yesterday, so we didn't see too big of an impact yesterday. Not too much across the board. So some pairs really got affected. You had your safe havens because of that CPI report from the United States that missed forecast. Your safe haven currencies, your yen, your Swissy got strong as a result. But other than that, things didn't go too bad. So now we've got next up the Aussie, right? And the more and more you guys get used to using forexfactory.com and looking at some of the other fundamental sites, you can see how this just goes in cycles. Every month you have these reports, and the results of some of these reports really can serve as a catalyst to get price moving in a direction, right? Technically on the chart. So that's why we always pay attention to this. This was huge today. You got a huge crude inventory draw, right? Where investors are really worried because of the pandemic and because of how the CPI came out for the United States. Investors have started to really worry about demand, right? Demand, right? Growth, economic growth. But today you got a huge crude oil draw that came out, 6.4 million. So that was huge, right? That gave investors a little bit more confidence as far as the direction of the global economy. So there was some demand there, right? Higher than expected demand for oil. So, and then you just had here, right? The New Zealand dollar definitely shows some expansion and some growth. So their GDP number came through at 2.8 on an expected 1.1%. So you saw a little boost in the New Zealand dollar. And as we saw, right, from our technical summaries, you saw that you got pretty strong sales across the board on the New Zealand. So the New Zealand dollar is strong as it has been. The only question is, if we're looking to go long on a New Zealand dollar, are we technically at that low price? Are we at that discounted price that we want for the New Zealand dollar to take a shot at some long trade? So we'll take a look at that tonight. So also here we've got the inflation expectations, but the main thing for the Aussie is you're looking at the employment change and the unemployment rate. Okay, so look at jobs created. Okay, so you look at here, changing the number of employed people during the previous month. Actual is greater than forecast, and it's good for the currency. So that's a red folder that's coming out here shortly at 9:30 on the Aussie. So if you're in the Aussie pairs, just make sure that you're aware of that. And then we also have, okay, we also have the unemployment rate. So percentage of total workforce that is unemployed and actively seeking employment during the previous month. Actual less than forecast is good for the currency. All right, so two big reports coming out here shortly at 9:30. So we'll see how that impacts the Aussie. We know that it's been weak. You know, Ryan talked about earlier as far as the drop in the iron ore price, which is the #1 commodity for Australia. #1 trade partner is China. Okay, so that's always important to read up and find out, hey, what's going on with China? Is their growth slowing or are they expanding? Because if they continue to grow and they're continuing to expand, then that raises the demand for things like iron ore, okay, as they're building infrastructure and expanding infrastructure. So that's how it goes fundamentally. So that's where we are. So big report coming out at 9:30 on the Aussie. So we'll see what type of impact that it has. All right. Any questions on that before we move on? No questions? All right. Okay. Well, so let's take a look at, are we right? Are we risk on or risk off right now in the market? Right? What's the sentiment, right? In regards to investors. Are we risk on or risk off? Somebody take a shot at that for me. Put it in the chat. Take your microphone off mute. Let me know what you think. Right? Hey, we got a 50-50 shot, right? So don't be afraid to take a guess at it.
I say risk off.
Risk off. Okay. Risk off. Thank you. Risk on. Shiva said risk on. Deshaun off. Okay. All right. Back and forth. On. We got on. Okay. We got a little mixed bag. Thanks, Denise. Appreciate the participation. Carlene, risk on. All right. All right. So let's go and take a look at our risk appetite. Okay. Take a look at it. And let's take a look at these indicators. Okay. So let's look at the VIX, right? Volatility, right? Index. So risk on if the VIX is down. So can somebody tell me, is the VIX up or is the VIX down?
Down.
Down. Yep, the VIX is down. Okay. So these are a series of indicators and reports, right? So let's take a look at the gold and silver ratio. Risk on if the ratio is down, risk off if the ratio is up. Somebody tell me, is the gold silver ratio up or down?
Up.
It's up?
Oh, no. It's down.
We're down. Yep, we're down. We're down slightly. All right. So let's take a look at the Vanguard total bond market. Think about this, right? So we got the CPI numbers that came out, and everybody's worried about, they're wondering, investors are wondering, okay, hey, the Feds are talking about that they may start the tapering process. We know that the CPI numbers came out below, right? We're saying that, hey, inflation is not taking off as much as some people thought and that we're speculating. So when the government talks about tapering, the government is talking about the slowing down of buying government assets like bonds, right? So think about this. If the CPI numbers were down, showing that inflation has kind of come back down and is under control, everybody thought, hey, the market's running hot, inflation is hot and heavy. There's a lot of spending going on of the dollar. The Fed was saying in the last meetings, last month coming into September, hey, we may be looking at tapering, slowing down the purchasing of those government assets like bonds primarily. That's primarily what they purchase. we're looking at slowing that down in September. Well, the CPI numbers came out and said, hey, right, inflation seems to be under control. So now people are saying, hey, maybe the Feds are going to kick that tapering, right? That decrease in buying government bonds, maybe they'll cut that down and kick that can down the road starting in November instead of September, right? So if the Feds are constantly buying bonds, right? The reason why people like to buy bonds, right? Individual investors, is that they want a return, they want a yield. In other words, a yield is the same as an interest rate. What kind of interest rate can I get from the government if I buy these government bonds? If I buy and hold these bonds, am I going to get a good interest rate? If so, right? If so, I'll switch some of my assets, take it out of the market, which is riskier, and put it into more guaranteed government bonds if I can get guaranteed a solid return. So a higher yield. Well, here's the thing. The more and more that the government buys bonds, the yields go down. So there's a less of a return. Okay. So that's why everybody's following, seeing when are they going to start that tapering process. So if the government's saying, man, well, we were thinking about September, but now maybe November, and we're not going to slow it down quite yet, that means that they're still making those asset purchases. They're still buying those bonds, right? So with that being said, this is the Vanguard total bond market. Risk on, right? If the bond is down, risk off if the bonds are up. So are we risk on or risk off?
Risk on.
Risk on, absolutely. We're risk on. Bond yields are down, so we are risk on, right? They haven't started tapering quite yet, so we are risk on, because you can see right here in red we're down. Okay, so this is how you go through these reports. Okay, Dow Jones Utilities, risk on if utilities are down, risk off if utilities are up. Are we risk on or risk off?
Risk on.
That's right. We got it. All right. So we're in a risk on environment right now. Okay. Make sure you guys check that website out. All right. You should really take this, especially your swing trading and things like that. Really get to know the market, not only just because you're trading, but for your own life, for your own personal economy. Okay. What's going on? All right. So that's where we are on that. And let's give you guys a quick minute to post any type of setups that you want to look at in regards to currency pairs. You're welcome, Denise. You're okay. Okay. EA. GBP USD. GJ. Okay. EJ. All right. So we've got switch in. Okay. Swiss gold and the NZD CAD and the Euro USD. Okay, so let's take a look at the Euro CAD. All right. The Euro CAD, but first, since I'm on this NZD and we know that it's strong across the board, let's take a look at this. So they're saying, hey, the New Zealand dollar is strong. Okay, we got a strong New Zealand dollar. The CAD got some good numbers today too. Okay, but overall that CAD is pretty strong, looking bullish on all time frames to be exact. So the question is, do I have my low price, right? Looking at this 1 hour time frame, and for me, And my trade plan, the question is no, I do not want to buy the New Zealand CAD there. So we posted today in the Telegram a potential NZD CAD short because we are in an up retracement zone, right? So we're looking at that possibility to get short. Since that post, you got a brand new AB boundary that formed, and you have a pullback on that as far as the sub AB boundary to the downside. So what we want to do is you have an opportunity to trade this B2C move, right, down to a lower price, okay, to look to buy. Or if you're just going to remain a bull, then what you're going to do is you're going to closely watch this NZD CAD and all the NZD pairs for that matter to see, hey, can I get a low price? I want the price to come back down into my zone, into my sweet spot, right? Into this green area to look to take it long. I want a nice discounted price. I want a discount. I want to buy the NZD CAD, but I don't want to buy it at this price. No different than if we go shopping, right? So I need this currency to come down, right? I prefer it to come down around that 61.8 zone or deeper so I can put my stop outside this A, right? That's what my trade plan calls for me to do if I'm going to get long on this, right? So if you're a bear and a bear only, then you wait, right? I mean, a bull and a bull only, then you wait, okay? If you're looking to buy. If, okay, you're a bear and you say, hey, I've got this 80-20 setup, meaning that I got a new AB boundary that formed. I didn't get any retracement, right? So if this is 23% here, 38.2% here, I didn't even get a 23% pullback after that B boundary form. It shot straight up. Why? Because the New Zealand dollar has been strong. Okay. The New Zealand dollar has been strong. So now, but you can see how it likes to consolidate. When it makes that type of move, that 80-20 move, it likes to consolidate to try to figure out exactly which way it wants to go next. Who's going to win, the bulls or the bears? And we know that 20% of the time, right? Price can shoot straight to that 1.618D extension without hardly any pullback, okay? Any retracement. And that just tells you what? That the New Zealand dollar is super strong, right? That nothing's stopping it, okay? But we got to stall out and we got a trend line break and we got a pullback. So if we zoom in here, okay? If we zoom in here, we got the trend line break, right? It's when I made the post. And then we formed a low, and then price, when that GDP number came out for the New Zealand, right? It's amazing how it happens. When that GDP number came out for the New Zealand a little while ago, it pushed price right up into the retracement zone and up against the backside of this trend line, okay? Now, I got a stochastic that's still coming out of the buy zone. So if you're not already short on this, then you wait for a high price, right? Which we're already at a 50% pullback and we're up against the trend line. And it's just amazing. Look how strong of an impulse to the upside that was on that bullish candle. That's a huge bullish engulfing candle. But when it got to a key area, look at how it stalled out a bit, right? So it's just a matter of whether or not it wants to push further up in the zone or if it's going to push sideways until either the bulls or the bears win out, okay? So again, if you're a bear, you're looking for an opportunity to potentially get short back down to this level, right? At least the 382 level, okay? If we get short right now, if this was short right now, then you're looking at TP1 170 pips. If my stop's above the A, that's a 33 pip stop if I played that move right there, okay? 40, call it 40, right? If you put it up here, okay? So 40 pips with a potential return on that of at least 165 pips or so to the downside, right? So there's an opportunity there, but I'm waiting, right? Because we got a strong impulse move because of the fundamental report that came out on the New Zealand GDP. And we know that indicators are lagging. So we saw this huge bullish candle that got pushed up, but you see that that stochastic is still lagging, right? So I would love to see in this Asian session, this stochastic move back up to being overbought, right? And start coming back down, right? To kind of fall in line and to realign itself with the price action. So this is one that you definitely want to keep an eye on for the potential short if you're a bear. Like I said, if not, if you're a bull, just wait for it to come down to a discounted price, right? And if it decides to continue long on you, right, without coming to your sweet spot, then that's okay because there's 20 plus pairs to trade. All right. Any questions on the NZD CAD?
Hey, Benny, this is Denise. How are you?
Hey, Denise, I'm doing good. How are you?
Good. I've got, I think, what is a very fundamental question.
Sure.
When you say that, for example, the NZD is strong and the CAD is weak, can you tell me uh, how does that affect price action? For example,
Yeah.
please.
Yep. Yep. Go ahead. Go ahead. Give me the example.
No, I was just going to say, you just said a little earlier that the NZD was strong. So does that mean that the price action will go higher if it's strong, or vice versa?
Right. If it's strong. So you have to look at the pair, right? And it's not even necessarily that the CAD is weak right now. They just got good economic data out, right? They just got good economic data that came out, and you got a boost in the oil price, which Canada's number one commodity is oil, right? So we just know that over this last period of time that the New Zealand dollar has been very strong. And now we're talking about with this pair, what's funny is that this pair is an odd one for the question that you're asking, because the New Zealand is strong. But typically, the reason why we go over risk on, risk off, because typically when you're in a risk on environment, commodity currencies do well, right? So this is the case where you have a stronger currency that may be slightly fundamentally stronger than the other one, but the other one's not necessarily weak either. So sometimes what that causes is a sideways push, right? It'll force price action to move sideways. Okay, it'll force it to move sideways until something breaks that equilibrium and that agreement on price. But for your question overall, what you have to look at is which currency in this NZD CAD, which currency is the base currency and which one is the counter currency. Okay, so this one to the left is always going to be your base currency, and the one to the right is always going to be your counter currency. So if this was an example where one was extremely strong and the other was extremely weak, so if the New Zealand was extremely strong and we had a scenario when the CAD was extremely weak, then you expect price action on your chart to move up, right? To move up. But what we have to understand is that this is a zero-sum game, right? The winners pay the losers, and the difference is usually education. So there's always somebody on that other side, especially in the Forex market, because of the liquidity, willing to buy or sell. So everybody looks at these charts differently. So that's what forces this to move in waves, right? It forces the market to move in waves technically. So it doesn't just go straight up and straight down. Sometimes we have those strong fundamental occurrences where it does like have a strong impulse move to the upside, but how the market is going to move when it goes up is it's going to move in these waves, right? And it's going to create higher highs and higher lows. So just because we're saying, hey, that the New Zealand is strong, for example, the New Zealand is strong, and for the example we're using, the CAD is extremely weak, that doesn't mean that you're not going to have areas along the way where investors and people and banks, institutions that have been buying, they're going to get to a price level based on how they see the charts. Say this price level here, 92.11, which is our ceiling, which creates that ceiling, and people are going to take profit, right? They're going to take profit, and that's going to cause that price to drop, right? If I'm an institution and I'm trying to get orders filled, I can't push the market up too fast, because I won't get my orders filled at the price that I want, right? If I'm looking to buy, right? If I just put all my money in the market at one time and don't scale it in, right? Then the market will get pushed up so fast by the major players that all of their orders won't get filled at the levels that they want them to get filled at. So they don't get the best deal. So this market is always constantly buying, taking profit, selling off, buying, taking profit, selling off. So even on its way up, you're going to have these dips, right? You're going to have these dips. So like you hear in the stock market, right? People say buy the dips, right? Because there's always levels where people will be like, you know what? All right, it's time to take profit, or this is a level where we don't have as many people willing to buy at this level, right? So we got to get that price to come back down. And when it comes back down, it might not go as low as it initially was before, say at this floor where somebody might have initially bought, but it's lower, right? It's lower. And now I can buy and push the market back up, right? And then this is how technically you get what they call those breaks and those retests, right? So that's why they say like the market likes to come back and retest the level that it broke. Okay, so a price level. So this 92.11, all right, so market comes back down, buyers come back in at this level, push the market up past that 92.11, and then we're going to take profit again and come back to see if we've got more people willing to buy at 92.11. And that's what's creating your support and your resistance levels, right? And so on and so forth. And then it's the same way on the way down, right? We like to do what? We like to sell high, right? At a high price. Okay, so we like to sell at a high price. So if I'm letting loose, okay, boom, I need buyers to come back in, give me my high price, right? So I can unload the rest of my currency or my stock or whatever it is. Okay, they're buying at this level, pushing that price back up, and then guess what? I got some more that I need to let loose. Boom. Okay, people come back into the market, buy again, retest this level here at 91.64. I'm gonna let go again, right? If that level holds and nobody's willing to buy up to a higher price again, then I'm gonna let loose again and take profit. And that's how you get the waves in the market. So when we talk about strong versus weak, like, yeah, the New Zealand is strong, but you always are gonna have profit taking and people hunting for that better price. So you can see here, right? That fundamental announcement came in, good GDP numbers. Look, you have buyers at that level, boom. And now it's stalled. Do we want to continue to push this price up? Where are the buyers? Where are the buyers? Are we going to continue to push this up? Or, right, okay, well, we're going to let it go. So that's why we're saying, hey, if I really want to buy this, right? Because if you bought here and you're thinking long and you got your target, say, set up at this weekly resistance level here, which is another price level from a higher time frame. If you're thinking long and people start cutting and running and taking profit, right, you just got caught in the trade going the wrong way. Right? So that's how that all plays out. So what you do is you run your technical analysis, look at your key levels for support and resistance, which are price levels in essence. And then you use whatever confirmations that you develop as a trader that you like. And then, right, you take the setup in terms of what's the highest probability. We're never exactly 100% right, but we should know that with our trading strategy, that over time, 100 trades, 200 trades, whatever it is, that we should come out on the right side. Right? As long as we use proper risk management and we don't take ourselves out of the game with bad risk management before our winners come.
Yes.
Okay.
Yes. Thank you.
Yeah. Oh, you're welcome. Great question.
Wow. Okay. Thank you.
You're welcome. So, any other questions on this NZD CAD before we move on? No. All right. Thanks for the feedback, Benita. Appreciate it. All right. Okay. It's just like if you guys were selling something, right? On the Facebook marketplace or whatever. You sell it, you want to sell your shirt off your back, you want to sell it at the highest price possible. Right. And you have different levels. You know how low you're willing to go and how high, it can go. So same thing. And that's what you're seeing. When you're looking at technical charts, right? You're looking at footprints, you're looking at stamps, you're looking at the behaviors, the habits, right? The patterns of banks, institutions, retail traders all over the world, right? They're leaving a footprint, right? And the good thing about the Forex market is because it's so liquid that it forms repeatable patterns. That's why we teach everybody the Fibonacci sequence, because it tends to do the same thing over and over and over again. But you have to use proper risk management, because you can see here, right? We've got price, and then below we've got time. So we may know that technically this is what typically will play out with this pattern, but we don't know the time in which it's going to do it. So we have to use proper risk management and protect ourselves, right? Okay. So because we do not control the market, never try to convince yourself that you do. That's usually when you end up the wrong way. All right. So let's go to the Euro CAD. Somebody had a question on that. So if we go and we can look at, right, you can check yourself against your technical indicators and see like what's going on. So here, this is just kind of a mess, right? It's neutral, right? There's some equilibrium there, some indecision. Your bulls and bears are fighting it out here at the higher time frames. Then it's saying sell on a 1 hour and buy on the 15, right? So some of these pairs you might be like, you know what? It doesn't have a particular direction like the pound New Zealand right now. So you might say, I'll take this off the board, right? But we mark them all up technically, right? It's good exercise, and eventually we may be able to get something from that. So let's go back and take a look at the EuroCAD to see what's going on, and you can see how choppy it is, right? So you can see here what you see, right, written out for you on the EuroCAD. You can see how choppy it is on these charts. How it's just, look at that, how it's just moving from a daily perspective, right? We mark it up the best we can with support and resistance. But if there's nothing there, right, you got to break. And then look how it's just moving sideways. Look at the just messed that up. I had to come back and fix that later. But look at how it's just bouncing around. Like if we squeeze this out, right, it's just a nasty moving pair. Okay, you got the euro that has shown some strength as of late. You got the CAD that's showing some strength, right? And then when you look at the volume of it, like, look, you possibly, right, you can get, let me move this out of the way for a minute, from a daily time frame, you can look and you can zoom in and say, okay, well, okay. You can start looking and breaking it down since it's moving sideways as support levels from a daily perspective and say, well, it's been pushing up and now it's pushing sideways. These are daily candles. Look at that, right? It's really gone nowhere, just in the same area. This is what we call that range, right? So maybe you could say, all right, so if I come down to my one, I'm gonna clear this out, okay? Let me take a look at this weekly. And we can see overall, when we're zoomed out, that we're trying to push up. You can see, right, how this is ascending. Look, you can see how it's just bouncing around. It's kind of whippy, nasty, chopping around, right? And you come in here and you look from a weekly perspective. This is weeks at a time. And look at that. Just a lot of chop. So is there a potential for us to come down? We've got our 1 hour cleared out. We could come to our daily and we can say, okay, here's support at 148. All right, 82. And I like the color code, right? So for my daily, I use my red for support and resistance. And I'll just put it somewhere in there because we know that it's never just a line, it's actually a zone. So we can say, all right, let me first of all clear out my 15 and even clear out this 5. And we come to the daily and we say, okay, well, we're pushing sideways, it's ranging a bit. So here's a support level to where if this level breaks, right, here's my stochastic. It's kind of just been, but it's almost overbought, right? So we need a level to break when we're in the range. And then my next level down is at 147.86, like so. And then we can link that down to the 1 hour. And then we can say, all right, from this 148 level here, that's about almost 100 pips. Then we can come in and we can say, all right, we see that we had this wave. Look, here's a low, here's a higher high, here's a higher low. We pushed up, we didn't get the higher high, we went sideways, right? Simple as that, guys. Simple as that, all right? So now we come in and we can put a resistance level in. We know we got it right there. Swing highs and swing lows. Look, 2 candles to the left, 2 candles to the right that are lower than our center wick high. You can pick that off and see it real nice and easy. So we got 150.62 at resistance here. So we'll mark that. Okay. Like so. And then we've got 151, 131. We'll mark that. And then above that, we've got a weekly resistance level. So what you sit here and then you go back and you look at this technical analysis like neutral, neutral. Does that look neutral, everybody? Yes or yes?
Yes.
Awesome. You got it, right? So we're neutral. So look, and then in your lower time frames, it's saying what? A sell, potential buy. It's just all over the place. So what you say to yourself is, I need a breakout, right? I need a breakout. If you wanted to draw a zone, right? You could draw a zone, but I need a breakout below 148.82, right? And then potentially we got that next level. So if we get a breakout on the lower time frames below this 148.82, then we look for a potential pullback to retest the area, and then maybe we go down to 147.86, or I need a big time breakout above this level here or this zone. So if you're drawing zones like this, okay, you can say I want to see price break out above this level and then see what happened if we push up to this weekly at 150.190. Okay, but other than that, no real play, right? No real play. So we just sit here, because if you look here, we didn't look at this huge move and this huge push up, right? Over 100% overbought, and you got to push down. We didn't quite get oversold below the 20%, and then look at where we are. So everything is just lining up. If you look at your technical analysis summary here, if you go back, you look at how funny acting your stochastic is. If you look at the price action, you look at your support and resistance levels, it's like, I had this downtrend line that got broken, but it didn't continue up. It pushed sideways. So I need something, right, to break out. So I'm waiting. I need some levels to break out. So when you go down to your lower time frame, you come on your 1 hour, had it in the sell. So you can kind of start to mark you out some areas like, okay, here was the high right here. And you just want to start to look and see what that area looks like on your 1 hour time frame. So I'm gonna link that down to the one. Here's that circle, and it's just looking nasty, right? So as we zoom in, I need to redo that because I moved it. Oops. Like this. Put that back. So I need to go up here. Daily level right there. Bring that back down. Right here. Just brought back down just to be accurate. And we come into our one like so. So we can see clearly on our one, like, look, we've got a level moving up. Okay, you can see it's moving up. We saw that on the lower time frame. I mean, on the higher time frame. So if we want to bring this across here like that, okay, now we got a diagonal, right? Keep it like so, and now you've got these levels. So if I get a trend line break and a break of this level here at support, so something like this, okay, right? We get price that can kind of push down and give me that pullback, that maybe I'm looking to get down to this level. And then if I break lower than that, then let me go back up to the daily and see what that next level is. All right, that next level was a weekly level, okay, right here in this zone. So we're just tracking the price action, right? Straight down. So there we go. And then after that, should did a better job pulling those down. You got a level here, right? Which is another daily level, which is probably a weekly too. There. Okay. So what we need is for price to start moving, to break out. Okay. And if we stay disciplined like this, we don't get caught getting whipped around in bad setups. All right. So we'll just wait for this level to see if we can get a break on this level. Okay. So there was that high, and you can see how it's just pushing sideways. So let's see if we can get a break of these support levels and for price to start moving down or up. All right. But right now, no play on that. Right. And this is a good indicator when you see it like this, neutral, sell, buy, like it can't even make up its mind. Right. At least I can see here on a Euro Aussie that price might be long over the long term, higher time frames. And now maybe we're just retracing. Here, I can't tell, right? Does everybody see that? Drop me a one if you can kind of see how you can correlate. You can correlate things using the different sites and stuff like that. Awesome. Okay, so hands off that one, right? We've got other pairs to trade. We don't want to try to force something to happen where there's nothing there yet. Okay, so we're waiting on a breakout on the Euro CAD. Let's take a look at the Euro Aussie. And we can see that if we go and we look at the Euro Aussie, you got buy, sell, right? So that kind of in my head, I'm thinking what? Up, potential retracement zone, right? Super easy. Broke this level, this range that was here. That's why I had that box drawn. Broke out of that, right? See if it'll come back. It's retesting the top of that range, and then see if it can push down. But our stochastics back in the buy zone. We're in the Asian session, right? We know that there's less liquidity, so price just might push sideways through the Asian session. But you can see here that we've got an 80-20 play where price pushed up, right? Our AB boundary, we got a shallow retracement, meaning less than a 382 retracement on that fib level. Came up just shy. And then you can see it pushed up around this 118, 127, gave us some double top action. So it kept testing it, right? It tested it twice, that area, and then it's pushing back down, right? So we could set a target on that at our 382. Okay. Like this, if you were trading that B to C move, then you can set your 382 here, target. You can set a target here, okay? And then if this is where I originally entered at this level here, I'll take these out because I don't want to confuse anybody. Long, okay? So if you're waiting to, buy, if you're saying, okay, look, my higher time frame levels are saying long, okay? So if we go out and we take a look at our daily, right? Look at that, okay? We got a 50% pullback. We actually got a double bottom at the 50% up against weekly support. This blue line is our support levels from the weekly. And then look, okay, it's been pushing up. So you're looking at the euro that's been strong versus the Aussie. Now we're moving up into being overbought, but remember it's between 7 to 11 candles from overbought to oversold and vice versa. And we're looking at a daily time frame. So you can see that still can have some room if you look back here in the past to continue the momentum to the upside. At some point, we know that, hey, it'll expand and then it'll pull back, right? So we know that there could be a potential for price to eventually retrace. But right now, we're looking bullish on this off of this double bottom, off of the daily fib, okay? It's a beautiful move, right? So if you hear people talk about, oh, you got a W formation or, things like that, you can see it right here. Okay, see that? Right back into that double bottom, and then it pushed up and broke this downtrend line. Okay, so yeah, we're in the right, we're right on course with saying, hey, yeah, long, right? From a higher time frame perspective, but it's always a matter, am I in a retracement zone where price is pulling back? Okay, so am I, in this example, with us being bulls right now, am I in an up retracement zone, or am I moving into an extension? Okay, so this is where we have, right, that ABCD concept that you constantly see over and over and over again, right? Am I in a retracement zone? Okay. Okay. Am I retracing where the market is taking back some of what it put out? Or am I moving to the next phase, and that's C to D extension? Okay, A, B, C, D. Now, is it perfect like this all the time? Absolutely not. It gets choppy, it moves sideways, it pushes lower, then it goes high, and then it pushes lower. But as long as it's within that AB boundary, and as long as it doesn't take out our A, which is our extreme low, okay, then price has no choice but to go our way. So right now, if we come back down and look at the action, right? Look, on our overall large wave, okay, close this out. On our larger wave, look, here was our retracement and it's just bouncing around, right? And we're looking to see now if we can go into this up push zone, that C to D. Is it finally making that C to D? We thought it was here. Nope, it came back down double bottom to retest that price level at 158.99. And now we're pushing back up. So we know that, yeah, this is the larger wave, right? We're forming this larger wave, but we know that as it expands, it's going to contract, right? It's just like your lungs when you breathe, right? Price is going to expand and then it's going to contract and get back down to that low price, right? Expand and contract, right? So it's just kind of like the EKG machine, right? When you see it, okay, and it's forming the patterns and it tells the doctor something about the heart based on the patterns that it forms. Same thing. So you go A to B, right? Not as complicated, right? But in essence, right, you're looking at the footprints that is leaving, the stamps that is leaving, okay? So look, A to B, right? And we can see if we can get a deeper price, right, for that deep C and then continue to go long. So yes, look, Euro, Aussie, strong buy on your lower time frames to sell because we're in the up retracement zone. So yeah, it has been selling off. Now it's just a matter of if I'm short on this plan to B to C move, is it going to continue short to my target at a 382 or deeper? Or if I'm a bull and I'm saying, hey, I'm strong on that Euro versus that Aussie, right? That Aussie's been taking a beating for various reasons. Iron ore, COVID, their COVID protocol was super strict. It hurt their economy a little bit, right? With some of their COVID restrictions. So if I'm a bull, then maybe I'm waiting so I can get this low price. And that low price is whatever your trade plan is going to state. My low price is a 61.8, right? Or deeper. Okay. Sometimes I'll take a 50 with structure, right? If I look left and I got past resistance becoming future support to the 50, but I like a greater discount, right? We'll call it 50 or lower, right? 50 or lower, 50%, 61.8% off the price. 78.6% off the price, or 86% off the price, right? Because then I could put my security blanket, which is my stop loss, okay, below this low if I'm looking to get long, because then if it comes down to my 61.8, then my risk to reward is intact, right? If I get a 61.8 pullback and I take it, there's my risk. A projected 1.618D extension based off the retracement is there. Okay, so now, right, my risk to reward is at least 3 to 1. Okay, it all comes together. It all comes together. That's why we use the fibs to frame out the market. Okay, it can help you with direction, where to get in and where to get out of a trade. Okay, so if I wait on this low price and I know I like to put my stop below the A, right, I like it to come deeper. If it doesn't, then I missed the trade. It is what it is. Now, if I were to take it here and say, all right, I'm gonna take it off this 236 level, okay? Then look, if I take it off this 236 level, if I wanna put my stop below the A, look at how that cuts down on my risk to reward ratio. So what you would have to do is you would have to bring your stop up to make it all make sense, which some people are cool with that. You would have to bring your stop up closer, right? To put yourself on the right side of the risk versus the reward. But you're putting your stop in this AB boundary, and we know that oftentimes price likes to do what? Continue, right? You put a real tight stop, and then price pushes down like this. Boom, took me out. Okay. Then you say, all right, I'm gonna get in at this new level. Okay. I'm gonna take this new level. Oh, it's low now, right? And then price pushes up like this. And then boom, takes you out. And you're like, oh, I'm getting stopped on it. The market knows me, my name, my address, and all my kids, right? They can't stand me. So because you're running with these tight stops, and then what'll happen? You look back a day later, when you finally decide to get back on the charts, you blew 30, 40% of your account, and the price went just like that, right? So this is why we tell people, trade small, get your stop in the area that's not so obvious, have some rules in regards to what you're gonna consider to be your low price, okay? Which is why we like to say 61.8, 786, there's nothing magical about it, right? It's self-fulfilling. A lot of people know this in the market, your professionals, they know that that's a good discount, and it sets them up to be on the right side of risk to reward. And that's why a lot of people say, so this golden mean and this magical stuff, not really. Not really. When you think about it, it just makes sense if you're using the fibs, okay, to get a nice discounted price. Otherwise, you're gonna put your stop in an area that you have a high probability of getting stopped out, okay? Some people are cool with that because they'll say, hey, I'll take 3 or 4 stop outs, but if I get that 6 to 1, 7 to 1, 8 to 1 trade, it's gonna wipe out all of those stop outs and I'm gonna make profit. If you're cool with that and that's your trading style, then you can do that too, right? You can do that too. But then you have to determine what your lifestyle is. Do I have time to be sitting in front of my computer, looking at these setups to happen, right? And do I and get these exact entries, or do I live the type of lifestyle where I need to be able to use proper risk management, trade small, and then once, right, price starts going in my direction, once price starts going in my direction, then I can scale into a trade. So once this price, if I've got my levels here, okay. In fact, I'll just draw it out. All right. And I know we got other pairs to cover, but I want to make sure, I hope everybody's okay with me covering this. Okay. So if I've got my waves, right? Okay. And we're looking at this from a C to D perspective. Okay. And I got my C. And I got my D. Okay. And I draw my fib like so. And I'm thinking long. Well, what I could do is I could come in small, okay, whether it be a market execution or if I'm setting buy limits in my zones, okay. I could come in small here, okay, and that's all relative to the size of your account and your risk parameters, right? And price takes me in, boom, buy limits, I'm active. And it drops down, boom, I'm active. Takes in both orders, I'm in drawdown on my first order. That's okay, because what I put in here for both these orders equals what? 0.5%, 1%. If price then makes the U-turn, okay? If price makes the U-turn and takes me into profit, okay? Now, both of these orders are in profit, okay? So if I said, okay, I'm in at 1%, that's 0.5% of the 61.8, 0.5% here, the 786. Once it makes the U-turn, it takes me in profit. Now I'm up. So now what I look for is opportunities to where I get a pullback, like so. And if I get the pullback and my bias is long still, then on that pullback, I can add in 0.25%, 0.5%, whatever it is, right? Pulls back, okay? May even come back down. I'm at break even on this one. This one's still in profit. I'm still good. Then look, price continues to move towards my target, okay? Takes out another high, may move around a little bit, get all choppy, right? Stuff like this, come down, right? Come up, come down, pull back, okay? Well, guess what? I'm in profit. I'm playing with house money now, okay? So my balance was at 1,200. Now I'm up 1,500, right? For example, now I'm up 1,500. I'm plus, I'm good. Pulls back. I'm long to this 1.618, right? Well, I'm past it, but let's say this 618, right? 1.618, price pulls back on me. I go in, I put in another order, okay? I put in another order, price picks me up, okay? At the pullback, and then I finish out at my D extension, okay? So you don't have to trade a standard here initially. You don't, because you do not control the market. But once that price starts going into your direction, you can scale in, right? 30 cents, depending on the size of your account, 30 cents, 40 cents, 60 cents, whatever. And then you can end up, when it's all said and done, having had a full 4 mini lots, 5 mini lots in the market, but you did it a lot safer. You did it when you were up and you're playing with house money, right? Can everybody understand the difference in that? Than saying, you know what, I feel good today. I'm just gonna drop a standard or 5 mini lots here at this level, right? And now you're sweating, you're at work looking at your phone, right? When you're supposed to be doing your job because you're worried about if that trade's gonna go in your direction, right? So drop. Yeah, somebody tell me, right? Drop me a 1 yes in the chat if they understand the difference in that, right? And learn how to swing trade and control your risk properly. All right. Okay. So when we're looking at those C to D pushes, right? That's how we scale in. So we don't have to, I don't have to put a ton of money on a trade. Don't want to do that. Don't want to do that. I can't tell the future. I can't tell the future. But as the trade progresses, right? I could put something on top of it and let it ride, right? Okay. So that's just a quick little lesson on scaling into your trade, right? So that's the Euro Aussie, okay? On the 1 hour, see if I can get it back here. Okay, that's where we are right now. So we're looking at price retracement. You can see it's pushing up now, and we may not get that deep retracement, right? Or it may push up and then continue to make a lower high and then continue to come down, right? But it's the same way on the B2C move, right? Put your toes in the water at the B boundary, or say, hey, I'm only going to trade counter trend, right? Counter the trend, this B2C move to the downside. I'm only going to trade that if price comes up here. So if price, when I get a new AB boundary that forms, maybe I'll put a limit right in between that 118, 127, put my stop up here on the outside of it, right? Put my stop way out of the way, go in small. And then when it picks my order up, if it wants to continue down, then I can kind of add to the order down to my 382 or my 61.8 target. So it's just the same thing over and over again, just in the opposite direction. Okay. And then again, like I said, if you're a bull, then you just wait for it to come down to your low price, whatever that is based on your trade plan. Okay. So that's where we are. Any other questions on the Euro Aussie before we move on to another pair? And I apologize if we don't get through all of them tonight, but I wanted to make sure that we covered a few things so that everybody's clear on the philosophy and how we go about things. No questions? All right. So let's go to the, somebody had a question on the Euro JPY. I'll stay in the Euro pairs while we're here. Okay. And this one worked out pretty good. We mapped this out and it's continuing to the downside, right? So if we look at this from a daily perspective, this was a beautiful play. And we say, hey, we got two scenarios, okay? We've got a crown pattern, a bearish crown pattern, right, in the same area. And then we also have the potential, right, for a bullish crown in this area. But what that gave us, right, and what we concluded is, hey, no matter what, we're in the same area right now where we actually want to look to sell and go short. And then when we get to this right tip of the crown, if it wants to continue to push down, then we continue to trade to the downside. If we get strong price action that says, hey, there's support forming here, okay, and it wants to go long, then we'll do the same. We'll look to go long. But right now, we say, hey, we're going to play this short on the lower time frames, because when you look at from a larger perspective, okay, let me pull this out. We've got an up AB fib, okay? We've got an up AB fib that made a 80-20 play, a very shallow retracement, less than a 382, and it pushed up. And we know a high percentage of the time, price is going to stall out around your 118, 127, and it's going to push back down to try to seek out that 382 potentially. So far, we've been right? So this hit that level, pushed up a little bit, but this price came all the way down 541 pips. But what we did is we said, okay, we're more intraday. Let's zoom in now and just play the price action, trade what we see. So this whole entire down move right now, okay, from where we said, all right, we're looking for a reversal in the trend line break, has come down about 150 pips or so. So if we go down to the 1 hour time frame, we'll see that we were right on the money from the weekly ritual that we got this reversal. Okay, we got this reversal. So let me see if I can clear some things out here. Okay, I'll come back to that. Okay, so this is the area that we were focusing on for the reversal. I'm going to take this off, this crown off, since we see it now. And look at that. We got the trend line break right on the money. Here's that daily fib that we pulled down from the daily time frame. And look at the drop. We're right at a 382 and just about equaling that left tip of the crown. All right, we're getting close, right? So if I put that back on and we come and we look where that left tip is, and we zoom out a little bit, we can see, look, we're approaching that level. Okay. So drew the play up, ran the play. Okay. And right now, that trade just hit this 1 hour D extension. So let me okay, I'm just gonna leave it because I don't want to reset my chart right now. But we're just coming in 61.8 in confluence with this sub D extension. So look at this ABCD move that happened. Look, A, B, this was our C, our highest point. So if you look here, look, A to B, our highest point within our AB boundary is our C, and right down to our D extension, right on the money. So you're through 2 TPs, you just hit a D extension. So if you're in this and you're still short, you got a D extension in confluence with the 61.8 and our TP2. I mean, it's been down over 100 pips. You can look to take profit right now if you want. See if we get a new AB boundary that formed, right? Then look to maybe play the B to C move counter trend on that, or you can look to hold, right? If you think we're going to continue short, you can look to hold, wait for the pullback on the next fib and look to add to the trade to the downside. But this is the euro versus the Japanese yen. We are back to risk on right now. We know that the yen and the Swissy gained some strength coming off that negative CPI report from the US. What we're seeing to be back right now is business as usual. This stochastic is still in the sell zone, but we are at a key area. So I took profit on it. I'm through with that right now. We'll see how the market reacts once the new fib forms. It hasn't hit that D extension yet, but that's close enough for me. All right. So we'll see. We'll see what happens on that. So that's where we are on the EJ right now. That was a good trade. That was a good trade. Over 100 pips to the downside. Didn't take a lot of time to do it. All right. So you look at the area where that trend line broke here on September the 8th, and you look at where we are now on the 15th, and you're down 140 pips or so. So good job. Congratulations if you took that trade short. Coming out of the ritual, and I think we might even covered it maybe the Wednesday or Thursday before that. I'm not sure. I had to go back and look at the videos. Any other questions on the Euro JPY? Nope. All right. So let's take a look at the pound dollar. Okay. Second. Nathaniel, what's going on? I made sure I covered this this technical analysis piece that question you had that I totally forgot about before I closed out yesterday. I covered it in the beginning, and I can go over it. What'd you say?
I do. Thank you. I appreciate that. Thank
Oh,
you.
you're welcome. You're welcome. So not sure if you caught it all, if you were on or not. I'm sorry, I didn't have my eye on the chat.
Yeah, I caught it. I wrote everything down, investing.com. Actually, I thought it was SX Books, but yeah, I definitely caught it. I appreciate that. Thank you.
Awesome. Good deal. You're welcome, man. You're welcome. All right. So let's see. So let's take a look at the pound dollar and what's going on. So this was that counter trend move that we posted, okay, yesterday, and you can see that you got TP1 on that, right? So the pound, it kind of pushed down and pushed back up and moved sideways, but it gave us an opportunity for a nice B to C move that we wanted to take advantage of. The dollar is kind of hard to read right now. It keeps taking punches with certain numbers like the CPI, and then it drops. I'm still thinking overall, you know, dollar weakness, but that doesn't mean that price is not going to retrace on the dollar. So it's kind of hard to, dollar pairs are kind of shady right now with the dollar. You never know what's going on from day to day, especially with the pandemic. We've got some good economic numbers in some areas and not so good in other areas. So it's a day-to-day thing with the dollar. So we just trade what we see. And this was our latest opportunity, right? The fact that we got a new down AB boundary, we got an inner trend line break, and it's almost drew it up just how we drew it up. We got a 382 off that B boundary, right? So we know that it likes to do two things: retrace right away off the B boundary, or push down around that 118, 127 zone, then retrace. Well, three things really, because then there's a time when the momentum is so strong in a particular direction that sometimes it just pushes straight down, right, without retracing at all. So we got a reversal here, and maybe we get, maybe we get TP2 on that. But right now we're in a down retracement zone, right? So if we come here and we look at our technicals overall for the pound dollar, we're looking like it's a strong, strong buy. So it's just a matter of, we made this move here, but do we have our low price? This is just moving crazy. I actually would just have to remark this up at this point, but I can draw some fibs off this leg here and see where we come out. It may be better if I take a daily look, but let me take it off this low here. Okay. And matter of fact, let me just clear this. Okay. So this is our latest impulse move to the upside. All right. Take a look at this just from a 1 hour. So here's our upside move. We see that it's waving up. You probably got it taken out here. This was the extreme move that broke this wave cycle here, right? So if you come and you draw a trend line like so, like this, you see, look, touch, 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 and then you broke. But then we went back up, and then we've been pushing sideways. So if we run our fibs from the 1, they might come out looking kind of crazy. Yep, because it took it out. And then this is the latest move. So beautiful counter move here, B2C move here, right? But then look, it took it out and then it pushed right back up. So that's just that whippy nasty, right? That we really don't like to deal with so much, but I probably could do something from that higher time frame to make this make sense. So right now, that's the current fib there, right? But let's, that's the up fib. We drew it off of this one here, which was pretty cool, but it's just moving all over the place, but it's overall long. So let's look at it from a daily time frame perspective. Okay. So we've never gotten, right, which we've been talking about for a long time. Okay. We've got again, right? See how the market does the same thing over and over again, no matter what the pair, right? No matter what the asset class, to be quite honest, right? Some just move faster, some move slower. All right, so look, we got an AB boundary. Okay, walk this back. We got an 80-20. We pushed down. It went up, it double topped. Okay, it pushed down. So what we've been doing is zeroing in on the price action. Here's the daily 382. So I'm gonna go to my 1. I'm gonna take all these time frames out. All right, give us some clarity. So we're gonna clear this out here. And we're gonna come down. Okay. And this was the latest fib to the downside, right? So fib to the downside. So if we take this here, like so, okay? Because we went long off the swing before. And now we've got this downtrend line that price is just pushing sideways against, right? That's where you're seeing all the whipping down on the lower time frame, right? Anytime we get that sideways push coming from a higher level, look at that. Can everybody see how this was trending up? It hit that trend line and then it pushed sideways. We've got a fight going on. We've got some equilibrium, and somebody needs to make a decision on what they want to do, right? So it just so happens in between there, we found that little setup yesterday. So what I'm going to do to give us a clean look on the 1 is I'm going to trace right over this down sub fib like this. And I'm going to take this down here like so, okay? And what I want to do is I want to, yep, so that resistance level is still good. Look at some support, smart support. This level is good. This level is still good. So all these levels are still holding, right? This level, price tried to break it at 138.91, but look, it closed back below, right? So that's still holding as a resistance level, okay? We got the next level up here. So this is our daily time frame. So we'll link this down lower, okay? And we got this sideways push. And what I want to do is I want to take this long-term downtrend line, okay, down to the lower time frame, all right? Like so, so we know where we are, okay, when we're trading intraday. When we come to this 1, and if we zoom out, there's our setup, okay? So you guys been with us trading, you remember when we had, right? We had smaller fibs coming down, right? From the one, and we played this reversal, that B to C move, right? That got us up through TP2. But since that leg has completed in reverse, I just drug this sub fib down from the 1 hour to show, hey, this is a completed leg. So this is where we are. And you can see where we found, right? We've got a trend line. This was our high price. So the move before, right, was like this. Okay. Very important about the trend lines. I want to make sure I draw this out for everybody. This was our high point before in the price action. So you want to try to draw that trend line through that high price. Okay. So even if you had an inner trend line like this, okay, that was an opportunity to the downside. But you guys see this high here? Okay. This is a high. This was a high. This is a higher high. Okay. This high is higher than this one. So we have to adjust our trend lines to reflect that. This is done. Okay. So look, clear that out. Once I get this point higher, this is no longer valid. See how it was going through, right? The candles. I have to adjust that down like so. Okay. Because this is my new high point. Now I've got a more accurate trend line. Okay. So I'm still looking long, but we got this sideways push. We took advantage of this fib here. Okay. Like this, we took advantage of that fib there. So what could happen here? So even though we're still pushing up, right? Almost like a channel effect, right? We're still pushing up. What could happen is you could get price to come back down to this trend line. Okay. So we played this little reversal here. Okay. Let me put my template back in. Simple. Right. Look at our stochastic. We still have room maybe to the upside. Okay. But what could happen is you could see this price come back down and retest this trend line. Okay. And then push up. Right. Or it could just continue up from here. All right. But what we want to do is, this was nice. I took that to the 382 out and started pushing sideways, right? So the rest of this setup, not really worried about it so much. Okay. So that setup there, I'm done with it. All right. Nice little setup, but you can see this market needs to make a decision. So what I would like to see is, I would like to see this price come back down, right? If we can get it down, to come back down here. Okay. And give me another test of this trend line. That's what I would like to see. If I can get another test of that trend line, then we can look to see, hey, is it going to hold at this trend line? Okay. Since we do have some dollar weakness, right? Do we get price to hold at this trend line? If it does, right, we may look to take the snap action right back up long. Okay. But in the back of my mind, I also know we haven't gotten that daily 382 yet. All right. So right now, I'm gonna wait and see on the pound dollar, because that daily 382 to the downside that we haven't gotten yet is right here. Okay. So we want to mark that down to the 1. All right. So after that short move, I'm kind of waiting on the pound dollar. I want to see if I can get a push back down, see how it reacts at this trend line, because it's right back at that trend line again. Okay. See how we react at this trend line. If it pushes back down, okay, see how it acts at this uptrend line going up. And if we get, right, like this, okay, if we get it to settle and hold, and we get a trend line break and a push back up and it breaks this trend line, then you may be able to convince me that we're definitely going to stay long on this. Okay, that we're going to stay long over the long term. We got strong pound momentum. The dollar at that point may, still be pushing to the downside, right? We have to take a look at the DXY. But right now, I'm out of that little counter trend trade play, and you can see how we're just pushing sideways. The market needs to make a decision, right? So right now, I'm hands off on this play. Okay. Any questions on that pound dollar? I'm kind of in a wait and see mode on that. It's in a funny position right now. Right, we're saying buy right on our time frames, because yeah, it's been pushing up, right? But you can see, right, buy, strong buy, it has been. It's been pushing up, but I want to see if I can get price to come back down here for a low price and then see how it reacts at this trend line, because I'm not completely sold on that yet. Not completely sold on that pound dollar yet being long for the long run. We've been long here, right? But now it's sideways and I need to see something. I need to see a push back down to a level on one of these trend lines. Any questions on that? All right. It's been a good run to the upside. I just would rather see a better spot to go long on that now.
Hello. Hello.
Yep. I'm here.
Okay. From the daily perspective, it's currently at 618. I kind of like reacting. No, you can leave it in the 1 hour time frame.
On a 1 hour. Okay.
It's
All
like,
right.
yeah, it's like making like resistance like close to the 786 and the 618. So isn't that like potential for a drop? That's fine resistance over there.
Oh man. You're breaking. I hate to cut you off. You're breaking up really, really bad. You wanna put it in the chat for me? Your question? Yeah, we're getting really bad feedback. Maybe put it in the chat for us. Yeah, I still can't hear you. Okay. Yep. Try to put it in the chat for us. Sorry about that. Any other questions? Everybody see how this is just kind of, right? It's kind of funny. It's just playing around, right? High point. We've come here to this low, it's pushed up, but it's still right at this trend line, right at this level, right? There's some indecision there on what it really wants to do, right? We bought all the way up, right? It has been a nice push up long, and then it's just sideways. So we need to have some type of breakout, some type of decision needs to be made on that. So this little play was nice. This little play that we had here was nice that we found, but it's right within that range. So beautiful play, short setup, but let's just wait and see. All right, so we'll wait and see on the pound dollar. All right, I think it's getting resistance off the 61.8 and the 786. It's gotten resistance 3 times now. Yep, I agree 100%. I agree 100%. It is. It's definitely finding it. Okay, that's what I'm saying. I'm not completely sold, right? It's been retracing. That's why it's calling bullish. That's why it's calling a long play on that, because we've been retracing. We're in this down retracement zone. So of course it's long, right? You have to buy up, right? When you're retracing, right? On a down fib, you have to buy. So the signal is calling it long. But with all of this static, right? Like you say, the 786, 61.8 zone, it's some indecision there. Yep. Great observation. I'm thinking the same thing, right? And I know that from a daily perspective, we haven't gotten that 382, right? We haven't gotten that daily 382 level to the downside yet. And it's been messing around for a long time. But I know the dollar's not going to stay weak, super weak forever, right? The dollar is pretty resilient, right? The greenback. So that's still that target, okay, which falls in line with this daily fib for an extension level, right? So this is what I'm saying. Like, look, let's just wait and see on the pound dollar. Nice little move there, but enough with that one. All right. Good stuff. Good feedback. Good feedback on that. I appreciate it. So that's the pound dollar. Let's take a look at our GJ, right? To finish out the pound request that we had on the GJ. We'll take a look at that. And if we look and we see where's our pound yen, it's just neutral, right? Neutral, strong sell from the daily. But you know what? A lot of times when you get like a strong impulse move like you had on that GJ that we called out the other day in the morning session, it's gonna come to an equilibrium point, and then you have to decide. They have to decide who's going to take over, the bulls or the bears, right? So if we look at this GJ, right, we drew this up, but it's kind of stalling, trying to make his mind up, right, on whether it wants to go up or down, right? So that's why you've got neutral, right? Everybody can see that. It's a sideways push. So we're saying, hey, it's a potential 80-20 play here, but it's definitely pushing sideways. We got to push down to the 127, then it came right back up in the range, and the stochastics in the sell zone. But sometimes, you know, we're in the Asian session. Sometimes it just continues to push sideways. So there's really no play on that. We would love to see a pullback, right? And then if we look here at our daily, here, okay, because we're right up against that trend line. Same scenario almost as the dollar, right? We're right up against that trend line. That daily 382 is way down here, all right? And we've got, look at this rejection, right? How it just respects areas, everybody. If you zoom in, look at that. Look how it just respected these areas, okay? Take this out because that actually needs to be like that, right? And you can see how it's just respecting that area and it's struggling, okay? It's struggling. So you got the impulse push down, right? Which, look, you can see where price gave us that push down. So this is that same look on the 1 hour where we've got that price, that huge impulse move down that we took advantage of. Now we would love to see a pullback, right? And once we get that pullback, preferably up around this trend line, see if it wants to react back to the downside, if we can continue short on that, right? But I'm not necessarily a strong long-term buyer, okay, of the yen, maybe for the B2C, right, to buy back to the high price. But long-term, I'm not long on this. I would love to see it fall short to that daily 382 level here, which is quite a ways away still, all right? So we're kind of in that wait and see mode here. If you're a bear, okay, if you're a bear, you want a high price to sell at. We want to sell at the highest price. I don't, for me and my rules, I don't want to sell here, okay? And if it does push down, that's fine. To the D extension, I'll just wait, right? I'll just wait for a new high price and look to short. And if you want to play the B to C, then we're looking for and look to buy to the high price, you can do it, right? And then of course you have your times where the bulls take over completely and you start going through the entire zone and you take this A out and it does continue long. We don't know, right? That's why we trade with proper risk management and we try to trade in the direction of our highest probability at that given point in time, okay? So what we could say on the GJ right now is that if this is going to continue short, we do not have a high price to sell, right? So if you're going to stay a bear, we want a high price, okay? If you're looking to be a bull and go back to the high price, then we're in that zone right now, but we're pushing sideways. So it's not giving us anything right now in the Asian session, okay? Which happens a lot of times, like I say, when you get this nice impulse move over 100 pips to the downside, okay? You usually get that little accumulation that's going on before it decides to explode and make its move, right? And GJ has that type of personality to where it can just accumulate and then break out on you. So kind of a wait and see on the GJ right now. Any questions on the pound yen? All right. We got this the Swissy yen, and then tonight, guys, because I got a huge meet tomorrow morning. I'm going to have to wrap it up. So let's take a look at this Swiss yen pair because that came through early in the request. So I want to make sure I get to that. Right here. Okay. And we're down, right? So on your 1 hour, thanks for bringing this one up. We've got a new AB boundary, so we know what type of play we're looking at. Okay. If you want to kind of trend trade that, right? Because we've been moving to the downside. I think Casey did a video on this a long time ago, saying, hey, you know, she's a huge position trader, especially from the higher time frames. Say, hey, I'm looking at, I forget how many hundreds of pips it was, right, to the downside. And if you look at this from a weekly perspective on the Swissy yen, so far she's been right on the money, right? And you can see here past resistance becoming future support. This is a key level. So if we break that level, we may get this pushed down to 115. But we know that as it moves, moves down, it's going to move in waves, right? So it's going to move in waves, lower highs and lower lows, right? As it moves, lower highs and lower lows, if it wants to do that, right? If it wants to move lower, that's how it's going to move, okay? And if it wants to stay in this range, we know that it's gonna, if this is the bottom of the range and this is gonna hold, what is it gonna do, everybody? It's gonna move up higher anyway, right? It's just a matter if it's gonna move up higher to move to the top of the range, or if it's gonna pull back to form a lower high on a lower time frame and then continue down. Either way it goes, right? From this weekly time frame perspective, either way it goes, the 1 hour position right now is in a spot to what? It's at the bottom of the range. You got a new down AB boundary. When we get the new B boundary, that's like our bat signal for the potential of a reversal. So the reversal is either going to occur now and push up 382.61.8, right? Like so. 382.61.8 target, a boundary target. And if it wants to push back up to the top of the range, it's going to push through TP3. Okay. Or, all right, it's going to reverse now from the B boundary, push up to these levels and then short. Okay. Or you know how we get the scenario, which is why we draw it out both ways, where it can make a shallow retracement, push down to the 118, 127, and then push up. Okay. So this is a brand new AB boundary. All right. So all of us who are still on the webinar, you can see that this is a potential setup here for an 80-20 play. And you have your TP levels, okay, here. And you can trade it accordingly. If you're going to be a bear, then you just wait for the high price. It's very simple. No matter what the pair, same thing over and over again. All right, so we got a brand new AB boundary. We're looking for that deep C, which we could take advantage of to the upside, buy to the high price, or just wait for a high price and look to short if it wants to do that, okay? If you look to short at a high price, then you put your stop above the A to protect yourself. And then if price wants to continue to carry and get back range bound and carry to the top, then it just takes you out. It is what it is, right? That's why we use proper risk management, okay? But if you're long on that and it does it, then you're long anyway. So it is what it is. So that's it on the Swiss yen. I apologize that I'm not going to be able to get through the rest of the pairs that we had listed tonight. But we could definitely look to get into those pairs. I'll have them written down and we can kind of do it in the morning, or we can come back in the evening tomorrow. But I hope everybody got a little something from what we went over tonight, and I hope that it helps you all in regards to kind of understanding our philosophy a little bit better and how we approach the market. Any questions before we close out? No, we're all good. No questions. Again, if you want to go back and watch the replay, all right, just go to your topic section, okay, inside your platform, go to Inner Circle Live and just scroll down and you'll see the date. All right. Do we have a question? No. Okay. All right. Well, everybody have a good evening. And tomorrow is Thursday, so let's make sure that if you can catch Ryan at 7 a.m. And then I'll be back here to wrap up our week with another live session at 9 p.m. So if you get any questions in the meantime, definitely write them down so we can address them during the next session. All right. Have a good night, everybody.
Thank you.
Welcome.
Good night.
Thank you.
Good night.